This is 8-Minute Market Structure by Texture Capital, bringing you concise, expert insight for better markets. And now your host, Richard Johnson.
Hello, my name is Richard Johnson. I'm the founder and CEO of Texture Capital. We're a FINRA member and SEC-registered broker-dealer specializing in digital securities. We help institutions and investors more efficiently and directly participate in the private markets by providing tools for issuance, tokenization, and secondary market liquidity. Welcome to the fourth episode of 8-Minute Market Structure. It's like 8-minute abs, but for finance nerds. This is where I speak with industry experts and get their take on the most important market structure issues. It's a simple format, same question for every guest. If you're building a new market structure from scratch and could change one thing, what would it be? It's one topic, no prep calls, just 8 minutes of concise expert insight for better markets. Today's guest is Vlad Khandros. Vlad's the head of corporate development at Trumid, a fintech bond trading platform. And prior to Trumid, Vlad spent 10 years at UBS as global head of market structure and principal investments. And before that, he was at Liquidnet, where we both met. Vlad has also served on the boards of trading platforms and exchanges such as Memex, Chi-X, and BIDS, as well as serving as an advisor to multiple emerging technology firms. So it's safe to say, Vlad, that you know a thing or two about market structure. And let me put the question to you. If you were building a new market structure from scratch and could change one thing, what would it be?
Thanks for having me. Good to see you, Richard.
Good to see you, mate.
And congrats to you and the firm. So whenever this question comes up, and it's a good question, I fear it's trying to force a whole lot of things into, it's like a round peg, square hole or something like that. It's, people tend to come up with strong views of, what defines a protected quote and forcing on the whole market, or what's the right benchmark and forcing on the whole market. What's the right trade size of telling the whole market that they've got to then take it on. Doesn't work. It just doesn't work. And so I think it's important to recognize folks have different workflows, have different benchmarks, different trading styles, different time horizons on investments. And so to try to dictate that everyone use a single specific way is not the right way to go about it, which typically when people push for one specific change, that's really what we wind up saying, is that almost everyone should do it. And so that's why whether it's, building out a product or thinking about, policy changes, flexibility is actually key. I mean, which flexibility is ultimately what's so important, because folks otherwise tend to, I think, lose sight of what's actually really important for the client. And can I give one quick little anecdote, but it's actually relevant? Is that okay? Yeah. So I actually thought about it. I was going to say at least a little bit, even though it might not sound like it right now. But I had a chance to spend time with Clay Christensen years ago, and he talked about, and since been written, the job the milkshake was hired for. And this was, a company that spent a bunch of money at it, like trying to sell more milkshakes, added more ingredients to it. They did different marketing, and nothing was working. And if I remember correctly, they basically hired his firm, and he had people literally just go talk to the customers, like stand outside the store and be like, "Why'd you buy this milkshake? What are you going to go do with it?" And people got confused. They're like, "What are you asking me?" And so what they learned from it is that folks who were buying the milkshake were less concerned about potentially like what the ingredients were, which was so much of the focus were, and more about just like the workflow, which was like a lot of them were literally driving and they had one hand. And that was literally a huge chunk of the customer base. And so I say that because it's like, what's the job that milkshake's hired for? It's just when you're thinking about whether it's a policy change or building out a platform, just having that flexibility in mind is so key, so that you can service different constituents, but then do it in a way where you can have different workflows established, but then I'll figure out ways to the right mechanism so that then different parts can come into the ecosystem and still interact with one another.
Yeah, that's great. That's a great story. I do remember seeing Clayton give a talk one time as well. So I think kind of what you're saying is better flexibility, and I think what the implication is there is that what I'm kind of hearing is that we often have in many markets a one size fits all marketplace. I'm thinking of US equities, where you've got Apple, it's $1 trillion market cap, and it's great that there's competition from 16 exchanges and all the ATSs. But when you've got something that's maybe $1 billion or less in market cap, does it really make sense to have something like the oil protection rule make it, you potentially be fragmented across all these different venues.
Yeah, totally. I mean, and you also think about it from the standpoint of just as you go across different asset classes, different regions, different protocols. You've got some markets have a consolidated tape, post-trade, some have pre-trade transparency, some have order book protection. So you just start breaking out the difference where even within the equities as you look across regions, right? And then even if across bonds like FINRA, fortunately, has TRACE, right? Which much of the world does not have that benefit of a consolidated tape on the bond market, right? So you've got some fundamental differences that then really have changes on, well, what is actually what's the core of what's needed for customers.
Yeah, I think it's not just there's another dimension as well. It's not just the asset class, and that you can have, within one you can have very illiquid securities and very liquid ones, but it's also the customers. So you can have a market that's optimized for electronic market makers and the very large institutional asset managers, but it's not optimized for smaller buy-side shops or for small cap managers and so forth. So what functionality like the milkshake, what functionality does each of the buyers need in the market is, I think, something that's very important to think about.
Yeah. I mean, so the original Trumid protocol, the anonymous all-to-all protocol, was recognized that price discovery was a challenge, and you forget, there's major markets like you have lots of markets. Just you talked about U.S. equities earlier. You have a concept of a protected quote. You have a concept of a midpoint price that's relatively well understood and used heavily. You don't have that in the bond market, right? So just literally price discovery was so important to solve for in the bond market with the anonymous protocol. And so just a very different need to think about. And you think of the newer version, the newer protocol that Trumid had, attributed trading, that was dealer to client, but so recognizing very different use cases, but at the same time, it doesn't force folks to use one or the other. You can also get the benefit of liquidity moving across protocols. And so, just when we talk about like order, there's the workflow flexibility and there's a flexibility on the liquidity side. I mean, even the newer version of that's getting rolled out as we're speaking is more focused on list trading. It's also making sure that the protocols all have the option to come together as well. So that's why I just keep going back to that flexibility, understand, and ultimately it's understanding what, empathizing with the client, understanding what their real needs are.
Yeah, no, and I think, Trumid's obviously done a great job. But whenever it was about 10 years ago, I think there was a permanent explosion of all these different bond trading platforms that came out. I think you're probably the only one left. I think you acquired a couple along the way. So you've certainly figured out a solution there. We've got about a minute or so left. Is there anything kind of that you want to tell us that you're working on over there that's going to help to kind of solve these problems?
Yeah, thanks for the question. I think a lot of it for us is just continuing to think about what is the challenge and defining it real as specifically as you can, so you can really, really do a good job solving for it. I think, you can always, in theory, go hire more people. You can go buy companies. I think you can. It could be even harder to think about how do you solve for the workflow and do it in a way where it actually fits and integrates with other protocols, with other solutions as well. I think just putting all that extra time up front into thinking and solving for that proper integration of the different workflows is just so key. So that's where we keep focusing a lot of time, and certainly as we think about how we expand into additional markets, it's a big focus for sure.
Great. Thank you very much for that feedback and that insight, Vlad. I'm certainly going to take some of that on board as we build a new marketplace here at Texture. Thanks for your time. I look forward to seeing you in person again real soon.
That'd be nice. Thank you, Richard.
Take it easy, Vlad.
This has been 8-Minute Market Structure. Be sure to follow Texture Capital on LinkedIn, where we will release a new episode every week. You can also find us on Twitter at texture_capital and on the web at texture.capital. The foregoing discussion is for information purposes only and does not constitute a solicitation to buy or sell securities. Private securities offerings are not registered with the SEC and are considered highly speculative. An investment in private securities may result in the loss of your entire capital contribution. Blockchain is a new technology and unproven in financial markets. There is no guarantee that tokenization will enable any secondary market liquidity